All eyes will now be on TCS later this evening. A CNBC TV18 poll expects just a 2% dollar revenue growth in the fourth quarter, supported by cross-currency and continued recovery in the BFSI and retail segment. Reema joins in now to give us the key expectations, and in a bit we will get an IT analyst as well to tell us what to expect. Reema, the fear is that after Infosys scale down its margin estimates, what if TCS also does the same? Is that something that the street is penciling in?
Well, it is likely, but because Infosys has already done it, it may not come as a huge surprise. But let me first run you through the basic numbers. We're working with a dollar revenue growth of close to about 2%. This will look relatively better than Infosys, which had a 0.7% growth. So the comparison will make TCS numbers look good. The key reasons being, one, cross-currency. Secondly, TCS derives nearly 40% of its revenues from BFSI, and that could be a vertical which could start improving in the current quarter as well as in the upcoming quarter. And thirdly, TCS had a few drags in the form of Diligenta, which was the insurance arm, in the form of Japan as a geography. And those, while they may not grow in this quarter, at least the decline has been arrested, so that drag will not be there. So these three factors will contribute to a relatively better performance on the top line. On the margins, largely unchanged at 26%. Operational efficiencies will be offset on account of the rupee appreciation. As you rightly pointed out, the key to track will be their guidance on the margins. They don't give us a dollar revenue guidance. So on margins, so far they've stated that we will be in a band of 26 to 28%. But they have been hovering precariously close to the lower end. And now with the rupee appreciation taking place, will the company choose to be a bit cautious and lower the margin band? Nomura thinks that there could be 100 basis points downward revision in the margin. But since Infosys has already done it, and the street knows that rupee appreciation is a headwind IT companies will have to deal with, it will be a negative, but it will not come as a huge negative shock. In terms of management commentary to track, is there a pickup in U.S. spending by U.S. banks as well as retail firms? Have immigration-related issues impacted decision-making by clients? And thirdly, on account of the management changes, is there a change in the strategy of the company? Back to you.
Okay, Reema.